Hello and welcome everyone to today's Capital Readiness webinar, Borrowing with Purpose and Confidence, featuring the Business Consortium Fund. My name is Sonia Bigelow-Smith, and I'm the director of the Capital Readiness Program operated by the Capital Region Minority Supplier Development Council and fueled by the Minority Business Development Agency. Today's webinar will be very impactful and informational for you. We're going to get this webinar started, and I'll just share a few logistics here in a moment. So this is a recording. We will furnish the replay for you within 24 hours. Please hold all of your questions to the very end of the webinar, but type those questions in the Q&A box on your screen, and we will address as many as we can. And as we get started, or right before we get started here, why don't you put in the chat the name of your company or your name, and then also the state that you're dialing in from. We'd like to see who's out there participating and joining us today. All right, so while you're doing that, just a little bit about the Business Consortium Fund and this webinar that we're holding today. I'd like to introduce Ann Fan, my apologies, who is the Chief Programs Officer for the Business Consortium Fund. He is going to leading us through this presentation today, along with his colleague, Ruben Rodriguez, who is the Chief Lending Officer for the Business Consortium Fund. Both of these individuals have a collective experience of over 50 years in a variety of different organizations that they've worked up. So they're bringing a wealth of experience and information for you. I would like to just call out that the reason why this is so important from having Business Consortium Fund on this call is that they are a CDFI, and they'll share a little bit more about that. But more importantly, they facilitated over $230 million in loans to 1,000 MBEs, providing customized solutions. And as many of you probably know, that there are many significant barriers that underserved businesses face on a very, very real basis every day. There's much more reliance on personal savings. Typically, most underserved businesses are underfunded, which limits their growth and also the generational wealth opportunities that can be realized. So now to get started with our webinar, I'd like to turn it over to Ann Fawn, and for him to provide us with some introduction and get the webinar started today. Welcome on.
Thank you, Sonia. Hi, everyone, and thank you for joining today's call. I'm on from BCF. Before we begin, I would like to extend a special thank you to our moderator, Sonia, and her talented team for organizing this meeting and bringing us all together. Ruben and I are very excited to share our insights, and we hope that you will find them valuable as we walk through the materials and help you to be successful in seeking the financing that you need for your business. So with that, let's get started. So today's meeting agenda, if you would, on the next slide, please. So first, I will provide you with a brief introduction of BCF, what we do. Then I will turn it over to our Chief Lending Officer, Ruben, to walk us through what you need to know before you apply and to prepare for a loan application. Then we will walk you, through an overview of what BCF offers in terms of business loans, and if you're interested in exploring loans with us. So a little bit about us. BCF was created and seed funded by the National Minority Supply Development Council, NMSDC corporate members back in the mid-80s. We are certified CDFI, as Sonia mentioned, by the U.S. Department of Treasury. We are a mission-driven organization, so we're not for-profit lender. specializing in small business lending. And we are mostly funded by CRA motivated banks and corporate philanthropy. So these are some of the partners that we work with, as well as our sponsors. So our mission is really to expand capital access for businesses across the US, more specifically to underserved communities, so that we can have a more inclusive and equitable society. Our main focus and specialty is providing funding to MBEs operating in, with contracts with corporations and government organizations. So the issue that we're trying to solve for is really uneven access to capital. Historically, 50% of Black and 32% of Hispanics were denied credit compared to 18% of their white counterparts. And when they're fully approved, the number is much smaller, 20% of Black and 38% of Hispanics were fully approved versus close to 60% of white-owned businesses. And when they do get approved, those businesses are $30,000 less. They receive less funding than white-owned firms. As a result of not having access to credit, it really affects the profitability. The profitability is much smaller, revenue as well. So typically, white-owned businesses are 5 times greater than employer MBEs. And it really also reflects in job creation. So 20% of Black and 28% of Hispanic-owned businesses reported growth compared to 31% of white-owned businesses. So minority businesses often start and remain small, and they are often overrepresented in low-revenue industries. So our work is really to bridge the capital access gap and create opportunities for MBEs, as well as those in underserved communities. We measure our success by ensuring that our loans are affordable to all small business owners, so that they can secure the contracts that they need in order to generate additional revenue and be profitable, and ultimately creating quality jobs in their communities. So as Sonia mentioned earlier, we've funded over $230 million, close to 1,000 MBEs, and we've generated close to 8,000 jobs. So with that, I will turn it over to Ruben to walk us through what you need to know before you borrow.
Okay, great. Thank you, An. Thank you. As mentioned before, I am Ruben Rodriguez, the Chief Lending Officer with the BCF. I've been with the BCF the last 12 years after about 25 plus years in banking. Next slide. And really, I'm going to go over the borrowing basics of generally, what are the basics to understanding how to borrow money. And really, and there's really a couple of parts to it. So later on in the other slides, I'll talk about what we do in the BCF and how to borrow with us. But generally, it's really, this applies to everyone. And the key question to ask yourself is, can I afford the new loan payment in my current budget? Can I afford this new loan? Is it the correct amount that I need? So these are questions that you need to ask yourself first before you go to the bank, to a CDFI like BCF, or to any other institution. You really need to know how much money you need. So really keep that in mind. And borrowing means getting money from a lender with an agreement to pay it back later with interest. Usually it's broken down to 2 parts: the actual debt itself, which is the loan itself, and credit, which is what we analyze as a lender, your ability to repay the money that you promise, that you borrow and you promise to pay back later. And really, in what, the debt itself is that you're looking at managing the debt responsibly. Only borrow what you know you can pay back without struggling. That's key. So you really got to ask yourself, can I pay this money back with the profits generated from the business, or the cash flow generated from the business? And really, you got to stay away from avoiding to take too much. You really should take what you need, but also don't take too little neither, because you're going to be in the same hole that you were before. So you were borrowing for a certain purpose, and you really need to, really focus in on that purpose. And do I reach my purpose? Do I reach my objective by borrowing this amount of money? And really, you really should, focus in on the credit side. Is, do I pay my loans on time? Do I manage my credit? Do I utilize my credit correctly? Whether it be my business credit cards, my business lines of credit, maybe equipment lines of credit, or just managing your overall debt. And good credit history. Good credit history doesn't only mean business credit history. It means personal credit history, because unless you're a large corporation, publicly traded company, or a nonprofit, generally you're going to have to personally guarantee the loan. You really have to focus yourself on that, and never go into a small business loan that you're not planning on personally guaranteeing, because most likely you're not going to get approved, or you're not going to be able to move forward. Next slide. You have to consider the costs. So the loan is really three parts, right? It's the principal, it's the amount that you borrow, the interest, which is what the lenders charge you to lend you the money, and the fees involved. There's going to be application fees, origination fees. There may be on lines of credit, there'll be origination fees, but there'll be annual renewal fees on lines of credits. And that's standard industry practice. There may be late fees from late payments, which you want to consider, but obviously, you're not going to make any late payments, right? And you're going to have, you may have prepayment penalties, and generally that may come with commercial mortgages. Generally, with a CDFI or with an SBA loan, there are no prepayment penalties. Next slide. And interest rates. You've heard a lot in the news about interest rates. So we put a little box there in the little right-hand corner just to show the movement of the interest rates. It's been going up. So pre-pandemic, we had historically low interest rates. And those came, about from the recession that happened back in 2008. And moving forward, the rates were, really, really were low, to the point where it was very cheap to borrow money. So at the onset of the pandemic, it was at 3.25%. And I'm talking about the prime rate. And it's been inching up, and it reached a high of prime rate of 8.5% by July of last year. And last week, interest rate went down. Prime rate went down 0.5%. So we're moving in the right direction. We expect that to keep moving in the right direction, which is down. And I mentioned that the base rate, and that is the prime rate, and today is 8%, and that's the base that we use. And then you factor in a risk premium, and that risk premium is based on a risk. Is this a riskier loan to do? Is it a less risky loan to do? The less risky loans, we add, it could be prime plus 0.5%. It could be prime plus 1%. And as it gets riskier, you may pay prime plus 2 or prime plus 3. So that's how we determine the interest rate. Different organizations, different banks, different credit unions, they have their own interest rates. They have their max rates, and they have their minimum rates. So everyone is different in what rates they offer, but we all, primarily base our rates based on the prime rate. And then we add a spread, which is called a risk premium. Look at the loan term. If you borrow on shorter terms, let's say from 1 to 3 years, you're going to get a lower rate than when you borrow for more than 3 years. So if you borrow, if you take on a 5-year term loan with a fixed rate of, let's say your term loan of fixed rate, it could be, let's say 8%, right? On a 3-year fixed rate loan, it'd be 8%. You may be charged 8.5 or 8.75% on a 5-year loan. So the longer the term, the higher the rate is going to be, because it's riskier for the lender to go out too far out into the future. There are collateral considerations. Basically, lenders try to get as much collateral as possible. So generally, they'll take a filing, a UCC filing on your business assets. If the lender that you're applying with ends up being in second place, let's say you already have a senior lender, there may be a collateral shortfall. So there would be situations where outside collateral may be required, such as probably maybe, real estate equity on your personal residence. There may be other collateral considerations. There may be certain equipment or things like that. So collateral is a part of lending. A lender needs to have collateral, only because they need to have a way of recouping the money if there is a default. Unfortunately, we hope when you go into the loan, most borrowers do not default. So, we know that. But there are some borrowers that default for sometimes for no fault of their own, or, circumstances that are beyond their control. And market conditions, economic factors. Are we in a are we on an inflationary period? Are we, in a cyclical period where the economy is lower, or it's a better economy? And we look at the industry itself. Is this industry in the right cycle? Is it moving up? Is it an emerging market? So those are things that are looked at. And I mentioned fees. Fees are part of it, and we don't charge you fees for just charging you fees. But primarily, the fees are because we have to recoup all the analysis time that we put into it. We pull reports, we pull personal credit reports, we pull UCC filings. If in the event that we're taking real estate collateral, we have to do appraisals. If it's a commercial property, a commercial appraisal costs a lot. There may be in a commercial property a environmental risk. So we may have to do a phase 1, phase 2 environmental reports. So a lot of, there are fees that are involved depending on what the credit is. And there are attorney fees as well. And primarily the lender will charge you the attorney fees for closing, and you may want to engage an attorney. And generally, if you have real estate involved in the deal, then you definitely need to have an attorney, because it becomes a complicated issue. So keep that there are fees in mind, and keep that in place. Some lenders actually, like the BCF, sometimes roll in the fees to the loan itself, so that way you don't have to come out of pocket. And then sometimes you're required to come out of pocket up front, basically the commitment fee, and maybe sometimes real estate appraisal fees, because if it's if you're acquiring a commercial property, sometimes those appraisals, it can be very pricey depending on the size of the property and the complexity of it. Next slide. A loan may be right when you can show how you will repay the loan. So really, when you go to the lender, the first thing is that we look at is, what is this borrower's ability to repay the loan? And you should really be ready for that. You should know that you can repay that loan. So really, if you can internally show that you can repay the loan before you go to the lender, then you're ahead of the game, because the lender is going to do their analysis, and most likely they're going to match your analysis if you do it right. You sit down with your accountant and you do that. You know the purpose of the business loan. Very, very important. As a lender, when I worked with Bank of America, I worked with Chase and even with the Business Consortium Fund for the last 12 years. And I will tell you how many borrowers went and they had no idea why they were borrowing money for. They would come in, they say, I want a business loan. It's like, what do you need it for? Well, I don't know, maybe from working capital. And that's really what the primary purpose of every loan generally is working capital. And the lenders don't want to hear that. They say, okay, you need working capital. What for? Well, how are you going to utilize the working capital? So you need to break it down. The lender needs to know exactly what you're going to utilize the funds for. Uh, uh, we, make sure that I'm sure none of us would do that. No, none of the borrowers would do that, but that the purpose isn't for personal expenses. We won't finance any vacations or anything like that. But, and we don't finance any speculative real estate investments or anything like that. So there are lenders that actually do that, speculative real estate. So those are specialized lenders. And if you go to BCF or you go to your bank and they don't do that, they'll direct you to the right lender that may be able to help you with that. And really, the loan should create new growth opportunities for your business. So when you sit down and you think that you're going to need the money, will this money help grow my business? If it doesn't help to grow your business, if you can't see that it will help grow your business, then why are you borrowing it? So that may put you in a bind where you may not be able to generate sufficient profits forward to pay the loan. So really, that's a key question. Will this help grow my business? Would this loan help grow my business? Next slide. Getting ready to apply. Next slide. Before you apply, review your personal credit history. Very important. Remember, I said at the beginning that every loan, every small business loan will require a personal guarantee. Different lenders have different thresholds. Like the BCF would require anyone who owns 10% or more of the business should personally guarantee the loan. Other banks or other institutions may require 80%. So it all depends on what, who your lender is and what they're looking for. But always expect that you're going to personally guarantee the loan. Like I said, if you own a publicly traded company, then you need a little bit more, something more than a small business loan. So, but, always expect that. So review your personal credit history. Gather all your financial documents. So you're going to look at your last 3 years tax returns, corporate tax returns. Very important. Pull them out. Review them with your accountant before you go to the bank, because you're going to need to review them because you need to do an analysis with your accountant to decide whether, first of all, what you need and can I afford to pay this back? So that was point number 3. You determine how much you need. And consider terms and interest rates. So look up what's the prime rate right now? And you know that today is 8%, and probably in December is going to be either 7.5 or 7.75. So use that base and then just be conservative. I would always be conservative and say prime plus 3. And then you can work your way back. If you're less risky to the borrower, then you're going to pay less. And you can either fix it or leave it as an adjustable rate. And understand all your borrowing options, a product that would align with your purpose, and who are the lending institutions that I can go to. So next slide. Okay. Request a copy of your personal credit report from the 3 credit bureaus. Some lenders pull all 3. We tried to save money, so we'll pull one, and if we need to pull other reports, we'll do that. One of the beauties of BCF is that initially we do pull a soft pull credit report, so it won't hit your personal credit history, which is a great thing that we're doing that. We started doing that over the last couple of months. So, borrowers are pretty happy about that. Now you can go to annualcreditreport.com and actually pull your credit histories for free. The only thing that you would have to pay for is your credit score with each individual credit agency. So, but you can get an actual credit report from all three for free on an annual basis. So that's annualcreditreport.com. So keep that in mind. And as you go to each individual credit reporting agency, they'll offer it to you. So they'll say, we'll offer you the credit score, and we'll for X amount of money, and we'll offer you other services. So they'll try to upsell you, but you just remember that you can get all that for free, the actual contents of your credit report. So review them for accuracy, review such as credit accounts, payment history, balances, and inquiries. Inquiries do count. So if we see that, a lot of lenders, if they see that you're just going all over the place applying for credit, that kind of tells the lender that there's something going on, that there's an urgent matter, that there's a desperation. So that's a red flag. So we actually look at that and we say, why do you have so many inquiries? So if you do have a lot of inquiries, if you have some derogatories in your credit, be prepared, prepare a written explanation, look for any documentation that you may have to back up your explanation. So be prepared. Don't let the lender go to you and say, listen, you have this derogatory on your file, or you have too many inquiries. And you can be upfront with it and have it all prepared before the lender actually asks for it. So that goes a long way. As a lender, you want to see that it shows that you're prepared. So that goes in your favor. Thank you. Gather financial documents. Providing comprehensive and accurate information can expedite the application process. So you look for the general documents. They're going to ask for the last 3 years business tax returns and last 3 years personal tax returns on all the guarantors of the loan. Lenders are going to ask for 6 months bank statements. Now, going back to the tax returns, if your tax returns are prepared on a cash basis, and you're on and your financials are prepared on a accrual basis, which shows your accounts receivables and inventory, then you should have your accountant prepare accrual basis financial statements, P&L and balance sheet, to match up with the tax return years as well as an interim financial statement. So lenders want to see what's going on this year, not only what went on the prior years, but what's going on this year, what's going on right now, because things can change from the end of 2003. We are 9 months removed from the end of 2003. So you may have had some really good numbers up to 2003, but things may have went south. So we want to know that. Or things went south in 2003. They were good in 2002, went south in 2003, but on the interim, they look good. So there's really a good reason to have all these financial documents. We want to see proof of ownership. So all the corporate filing documents. So if it's an LLC, we want to see a operating agreement. We want to see articles of incorporation, articles of organization. So we want to see proof that the businesses or the filings were done and you are the proper owner of the business or shareholder. A copy of your government ID and things like that. Determine how much you need for working capital. Be specific on the intended use of the funds. Do not request more than what is needed. Very important. I cannot stress this, and I could just tell you that as a banker, how many people needed $1 million? Just about everyone needs $1 million, but that's not the truth. That's not, that's really not reality. So really, really sit down and think how much I need. And will my business be able to support it? So this is not not too scientific or anything like that, but a rule of thumb. Look at it this way. If your gross revenues are $1 million a year, you probably will not qualify for more than $300,000. In certain cases, you may qualify for more if it's a commercial mortgage that has some substantial collateral attached to it. But generally, rule of thumb, 30% of your gross revenues, and you should not be able to borrow more than that. Most lenders will probably not lend you more than that, so just keep that in mind. Okay. Um, if you're looking to consolidate business debt, make sure it is business debt. If you're using personal credit cards for business purposes, please keep a proof of it. So if you use your card, have proof of that as well. Be prepared to show that, and compile a list with all the balances and everything like that in the notes and all that stuff. Just have it ready so the lender can look at it and review it and see that there would be a cash flow increase or a cash flow increase in your business in decreasing the amount of payments that you're doing on a monthly basis. So want to make sure we do that. Okay, so can I afford the new loan payment in my current budget? You really have to look at that and analyze that. Next. I mentioned terms and interest rates, so I'm not going to get too much into it, but as I said, the loans can vary from different terms. It could be a short-term loan, it can be a bridge loan. Maybe you need a loan for a couple of months to support a purchase order or something to that effect. Or you're going to need a line of credit that renews every year. Or you get a short-term loan. A short-term loan can be anywhere from 1 to 3 years. Or you need longer-term money. So over 3 years, it'd be a 60-month loan. So as I mentioned, if it's longer terms, the rate may be higher. Next. Generally, if you go to any lender, they're going to offer you installment loans and they're going to offer you revolving lines of credit. And the lines of credit come in different flavors, I call them. The BCF offers a borrowing base. So it's an asset-based line of credit, which is based on your accounts receivables and your inventory. So that is always measured every time you're going to draw on the line of credit to see that there's sufficient collateral for the lender to continue allowing you to draw down on the line. Installment loans could be for larger investments where you want to really term out everything for a longer period of time. You want to purchase equipment. You want to even working capital can be long-term, can be permanent working capital. You may have invested your funds, your personal funds into working capital, and now you want to kind of ease it out and have, kind of term it out for 5 years. So even working capital can be long-term as well. The good thing about installment loans is you can fix it and you'll have the same monthly principal and interest payments until the loan is paid off. In certain cases, if cash flow is an issue that you may not qualify with, there may be an opportunity to have a 5-year loan with a 84-month amortization, which will lower your interest, your monthly payments, but then we'll have a bullet payment at the end of the loan term. So there are ways to look at it, different ways to look at it. Next slide. Borrowing cost varies by lenders. These numbers that we have here are just for conversational purposes, so you could just see. You can see sometimes you go into online with some online lenders. You have great terms sometimes at 6%. Sometimes you get up to 99%. And, SBA loans are reasonable. Loans through CDFIs like the BCF are definitely reasonable terms. Equipment financing loans can be sometimes pricey, can sometimes be low depending on the equipment. Invoice and factoring can be extremely pricey, very, very pricey. And I don't really want to get into merchant cash advances, which I see a lot of borrowers who get themselves in, and they sometimes have weekly payments. Some of them even have daily payments coming out of their accounts. So we have rescued a lot of borrowers from there. So stay away from that. That's not good for you. Next slide. And choosing a lender. As a community development financial institution, the BCF, of course, we want you to come to us, but really the first place you're going to go to is your bank, your traditional bank, who you have a relationship with. That's really where you go first, because they offer the best rates. They offer the quicker turnaround. They have the infrastructure to turn a loan around very quickly. So you really want to go to your bank first. If you qualify with your bank, you're going to get the best rates, get the loan quickly, and you move on, and that's it. But sometimes your personal credit, your business credit, your circumstances, your business cash flow may not be there. Your balance sheet on your business may not really be there, and the bank may be handcuffed to help you. And at that point, you may want to go to a credit union, or you want to go to a community development financial institution like the BCF, because we are more flexible, and we have different loan programs to help you where your bank would not be able to help you. Next. And I'm going to turn it over to An to continue talking about submitting your loan application.
Thank you, Ruben. So when you submit a loan application, what lenders typically ask for is for you to upload your documents, which Ruben went over earlier. And then upon reviewing the documents, if you pre-qualify, typically they issue you a term sheet and really provide you with additional details about what you're eligible for. And then if you choose to move forward, then you do a full underwriting. So they ask you to submit all of the necessary docs. It really varies depending on lender to lender how the process works. But typically this is the process. Once they reviewed everything, they issue your loan agreement. You will review it with your attorney, or you go to closing, and the funds would be dispersed to you within 3 to 5 business days. And then really the final step is to have a payment plan in place. Ideally, you would sign up for auto pay so that you can avoid late fees. And then just do a check-in with your lender every now and then just to make sure that you're fulfilling your terms. So here's our financing solutions. If you are interested in speaking with us about getting financing or working capital for your business, we offer 2 products, business term loans and business line of credit. So the benefit of having a business term loan is that you get all the funds at once, so that these are for larger purchases and investments, or even debt consolidation. So for first-time borrowers, we typically lend up to $350,000. Once you've been with us for a while, we can assess and give you a larger loan amount as needed. We can go up to $1 million. It really depends on again, the loan purpose, and we want to see performance once you've been a customer. Our terms are pretty straightforward. We do lend up to 5 years, and our rates are pretty competitive, typically prime plus 1 to 3%. The payment is very predictable. It's fixed, so exactly how much to allocate on a monthly basis. as well as the payment date. And there's no prepayment penalty. So if you end up being able to scale up quickly and repay the funds, there's no fee associated with that. As for the line of credit, again, it's really contract-based financing. So it is a renewable line of credit on an annual basis. And the monthly payments can fluctuate depending on how much you borrowed. The benefit in working with us is that we guide our client through the application process. So we have, one-on-one consultation, check in, making sure that you understand, the docs that we're asking for, making sure that you understand the terms, if you are pre-qualified, and kind of walk you through the necessary steps to get the funding that you need. As opposed to sometimes when you work with a bank, what they do is they process your application, and if you approve, you hear back from them. Sometimes you don't. So that's really what differentiates us from working with some banks, is that we provide technical assistance and really help you throughout the application process. In terms of eligibility, so the business must be owned by an MBE or a socially and economically disadvantaged entrepreneurs. So that's really, low to moderate income, a business located in low to moderate income neighborhoods or zip codes. And the business has to be in operation for at least 3 years. Typically, our guidance is the gross annual revenue of $150,000 or higher in the prior year. That's because our loan starts at $50,000. And the business model is typically B2B or B2B2C. We don't do direct lending to consumer, businesses that deals with consumer like services, or business to government. And you have to have at least one existing or new primary contract or even a subcontract. But we also consider purchase orders. And as Ruben mentioned earlier, we do require personal guaranteed for all business owners with greater than 10%. So this month, we do have a promotion going for Hispanic Heritage Month. So if you submit an application before October 15th, the $350 application fee is waived. So I'm going to turn it back to Ruben to walk you through our loan application process. So this is a more detailed view than the one that I provided a few minutes ago. Ruben, you're mute.
Sorry. It's pretty simple to apply now. Our process is much more simplified. It has an additional step, but the step actually helps move the loan along quicker. You go on our website. Sometimes we'll send you a link, but either we send you the link or the website itself. You could still apply either way. So it's, I invite you to go to our website so you can see our loan products, look at all the questions and answers, and you may be able to get a lot of questions answered just by going to our website. However, if you'd like a one-on-one consultation before you apply, you can do that by emailing us at loans@bcfcapital.com, and somebody will get back to you and set up a one-on-one consultation. But let's say you've already applied. Like I said, we had instituted a one step that really has helped move our applications along, and that's called a pre-qualification. So that first step, when you apply, you fill out an application that's going to take no more than 10 minutes to fill out. It's a very simple application. And it really, it asks the basic questions and things like that. And it's going to ask you to sign up to our loan portal. So using your email address, you're going to set up a password. And once you get into our portal, you're going to see an upload slot. And it's going to ask you to upload your last 2 years of business tax returns, is going to ask you to upload your P&L and balance sheet for the current year. So in this case, 2024 through year to date. So maybe through August or through July or through second quarter, somewhere where you have your accounting up to date. And it's going to ask for a copy of your ID so we can identify you. And that's pretty much it. That's pretty much it. There's not much documents that we need up front. And what we're going to do is we're going to just do a quick analysis of your business financials, and we're going to submit a term sheet to you. The term sheet will outline everything that you will need to move forward with completing the underwriting of the loan. It'll give you the loan terms. And it's going to address any issues that need to be addressed. And at that point, we'll actually schedule a meeting with you, go over the term sheet, go over the terms of the loans, and go over what else is needed to complete the rest of the underwriting of the loan request itself. After you sign the term sheet, you agree to the terms, we may be able to modify it because it's a talking point. So the term sheet doesn't bind you to anything. It doesn't bind us. It's just a talking point. So we need to adjust it. We need to make some changes. We can do that. You can sign the term sheet. Generally, you don't pay anything to sign the term sheet. However, if it's a complicated deal that does include real estate, we may ask for a good faith deposit up front because there is going to be some costs involved in underwriting the loan. Once we get the term sheet back, and keep this in mind, very, very important, upon receipt of all required documents, very, very important. And I'll go later on in one of the later slides what those documents are. Very important. Because if we can do that, we can keep to once we've got it for underwriting, we can keep to a 1 to 3 week timeline to underwrite and get it approved by our loan committee. So important to upload all the rest of the documents that are required for us to complete our underwriting. We get a lot of people that just won't just give us piecemeal. They'll give us a piece of this, a piece of that, and hopefully they'll get approved. No. We ask for those documents because they are required, because we have a process, and there is an analysis process that requires us to review those documents. Next slide. Okay. Upload the following documents immediately, right? So this is for expedited pre-qualification. I had mentioned the 2022, 2023 business tax returns. If there are any tax returns that are on extension, there should not be any, or there'd be very little for 2023. You still got into the middle of October. Then we'll ask for financial statements prepared by your CPA, at least on a compiled basis, for us to be able to consider it. Year-to-date interim financial statements, current ID. And then we, like I'd mentioned, upon initial review, BCF will set up a video conference to discuss options. Upon the determination of a path forward, BCF shall issue you a term sheet that will include all the conditions to complete the due diligence and issue a formal approval. So when I say a term sheet, it's just what additional documents will be needed. There may be additional from the documents that are required to be uploaded. There may be additional documents that may be required. Why do we ask for those documents? It shows how much cash flow is available to repay the loan. It keeps monthly payments within your budget and affordable. Shows our overall financial health of your business. We review the balance sheet to see what's the financial health, what's the equity in the business. Highlights the amount, like I mentioned, equity and retained earnings, and ensure compliance with regulatory and legal requirements. We do have legal requirements as well that we need to comply with. Next slide. Okay, so as I mentioned, these are the documents after the pre-approval, after the pre-qualification. There will be additional documents that be required in order for us to complete the underwriting, which is we'll ask for an additional year of the tax return so we can analyze 3 years. So we can analyze from year to year what's going on, what happened in 21, happened in 22, and how did the business flow from year to year, year over year. Okay, we may ask for accrual basis financial statements, especially if the business the tax returns are prepared on a cash basis. We'll analyze the bank statements. We'll analyze the accounts receivable aging scheduled and accounts payables as well. We'll look at the contracts. So we'll ask for the first your 3 biggest contracts. We'll look at your contracts as well to see, how long is it going for, how much money is it for? We'll look at all these things. We'll look at what your uses of funds are for, how you plan to utilize the money. We'll look at your legal corporate documents, make sure that is in order. And at a certain point after approval, we'll definitely want an insurance form like an Accord 25 just to make sure that you have business insurance in place. And if you have any minority business certifications, we want to see that as well. In certain cases, it may not be required. And basically, that's it. This is our contact information. You can look at on our website. You can go to see any videos from prior workshops. You can reach out and you can apply directly through our portal as well. So next slide. And these are upcoming workshops, and you can see this presentation and you can look at it. And if there's anything that you wish to attend, it's right there. And I believe that's the end of our presentation, and we're going to open it up for questions.
So this time, if you have any questions for us, please type it into the Q&A.
Well, gentlemen, first of all, thank you all for taking care of some of the questions that were already put in the chat. But I do have one for you. What key questions should a business owner ask when speaking with lenders?
I can take this one. So, some of the questions to consider would be, what are the loan terms and interest rate? What fees are associated with the loan? And as Ruben covered earlier, what documentations do you require? What is the approval process and timeline so that you can plan? And then also what kind of collaterals are required? It's really all these questions will help you to be informed of preparing a successful loan application package. Sometimes a loan, can take 4 to 6 weeks, and you don't want to apply for a loan if you need capital immediately. So planning is really important.
Yeah,
You for that.
definitely. Do not wait to apply when you actually need it. Wait, like when it's urgent, then you're putting pressure on the lender as well. And some lenders can probably move quicker than others. Banks can move a lot quicker than CDFIs because we're limited in staff. So really, if you anticipating when you're going to need the money is very important.
Okay, another question. Once funding is secured with BCF, what are some best practices or support services provided by BCF to help manage capital effectively?
Well, with BCF, once we give you the loan, we're gonna ask for financials annually. If it's a term loan, we're gonna ask for annual financials. Periodically, if there is a problem with the loan, so let's say there's late payments, we would monitor the loan a little bit more carefully, we'll set up meetings with you, and we'll discuss what's going on. Is there any remediation that we can take? And we'll try to get you straight. You know, if there's any loan modification that's needed, we hope there isn't, but if there is, we'll consider that as well. So yeah, we are hands-on, and we want to keep you straight. We want to help you. We're here to help you. And so we're not going to turn our backs on you. So just because we're the lender and we lent you the money, we want to make sure that you succeed. That's our goal.
That. Another question is, will you require a business plan as part of the documentation process?
Business plan is not required for most loans. It's helpful. If you have a business plan, it's helpful. It helps us understand your business better. It is not required. It may be required if it's a complicated deal. So let's say you are acquiring another business and you have to project some cash flows and you have to plan out the two businesses that are merging and things like that. A business plan probably would be required, but for most loans, it's not required.
Just to add to that, a capability statement is often very helpful also when you approach a lender, because it gives the lenders an overview of the company, your core competency, also having the certification in industry, business size. All of that information is also very helpful. So if you can, submit that as a supporting document, the lenders will immediately get a sense of who you are as a borrower.
Thank you for that, gentlemen.
Thank you, Amanda. So I noticed there are a couple more questions in the Q&A chat room. Ruben, why do we need contracts? We are not a government contractor.
Why do we need contracts? Well,
yes.
That's really our niche. That was really the mission, the original mission of the Business Consortium Fund. And that's really our core constituency. The NMSDC was created, the BCF was created by the NMSDC in 1987 to support those MBEs who obtained these great contracts from these large corporations. And we were created to support those MBEs with those contracts. So we've evolved. We were first doing participation lending with banks, but we've evolved to do more direct lending, which is what primarily we're doing now. And the contracts, sometimes, first we need to review them to make sure that those contracts align with what your ability to repay the loan in the future. But also in many cases, when there is a collateral shortfall, a contract payment assignment may be required.
Perfect. And then the final question is, can you expand on the types of technical assistance you can offer borrowers? But I would also like to mention, and maybe that would be a perfect segue for Sonia to come back on.
Yes, so we help our borrowers to essentially gather off the docs, and if there are gaps and requires further explanation, we'll help them to essentially address those with the underwriter.
Great, and thank
And
you.
in addition to TA, we also hold workshops, such as managing your business cash flow.
All right, thank you. Thank you, Ruben and An, for this very informative presentation. I hope you all were able to get some really good nuggets. And I'll just add to that last question before we close here really quickly. Is that our Capital Readiness Program was designed to provide you with the support that you need as you go through this process. And what that means is that we've developed programming, over 24 different types of programming, from incubators and accelerators, to get you prepared for this step. I can just see by the number of people that have jumped on, we had a great response in terms of people who register for this, but there are business owners that have real opportunities out there, and we want to help you support. We want to help support you to get you further along that access to capital, or securing the capital that you need. And so Amanda did put in the chat earlier how to reach out to us at hellocrp@CRMSDC if you'd like to talk to us further about the programming that we have available, to get you, if there's a gap in one of the things that they've identified, we're here to help you and try to help close that gap so we can get you further. Let me just make a comment. We're at the 2:00 hour. I hope you could hear the genuineness from Ruben and An, based on their years of experience, of how they really want to help business owners and underserved minority-owned businesses grow and scale their businesses. And that's why we wanted to provide another lending option for you. You should be vetting banks and lending institutions like you would vet anything else. So I hope you did hear the genuineness coming from them. And that's what we received when we were looking to secure them as a partner, and also to help us with helping to close the capital readiness gap that exists. And then lastly, I'll say this, and I think Ruben highlighted it at the very end of his segment. The best time to look for capital is when you don't need it. And so let's just know that we're in the preparation business. Readiness is a strong core tenet to what we're doing. And we want to help you to get there before you don't need it, so that once you do have a contract or you've secured some type of opportunity, that you have all the fuel that you need to deliver against that opportunity. So thank you all very much for coming on and jumping on this presentation. Please stay connected with us, because we've got great another webinar that's coming in on October 8th. You all will receive that information as well as this recording. So thank you all very much. Have a great, great afternoon.